I found myself waxing nostalgic today, going back to 1982, when I was a young kid at Harvard Law School, angling for a job more suited for the students across the Charles at the business school. I wanted a job at Goldman Sachs because I was a demon for research about stocks, and the more I read about Goldman, the more I realized working there could change my life. Of course, I was immediately turned down. I wasn't up to snuff, didn't understand the balance sheet or the income statement, didn't know how to use the HP-12C calculator one day obviated by Google. I didn't know how to carry myself, how to dress. Maybe it was that Marshall's corduroy suit with the button-down sans cufflinks. And I didn't know how to eat or talk the way gentlemen instinctively know how. So I went about I learned these things. I studied How to Win Friends and Influence People, the 1936 classic by Dale Carnegie. I worked on diction. I went to a wondrous place called Mo Ginsburg for my clothes, a pipe rack warehouse with suits that you couldn't tell from Brooks Brothers. I took a corporate finance class. I took a year of accounting. And when I reapplied, I was immediately rejected. Why? Well, this was Goldman Sachs, for heaven's sake, and I still wasn't good enough. I was told not to come back, which I immediately responded by saying that I'll take that as a maybe. They told me a no means a no. So I redoubled my efforts. It's like a variant on that old Groucho Marx line. I refused to join any club that would have me as a member. I figured if Goldman didn't want me this badly, the place must be incredible. So soon after, I told the person who'd given me the solid no that I was in New York for Christmas break. I wanted to stop by. The naysayer said, sure, see you at 11. I got there. His assistant said, just go into this little closet-like space, and someone would be with me, be soon by to interview me. I said, terrific. 6 hours later, I popped out to see when they would meet me, but no one was there. Everyone had gone home. That intrigued me. So I came back soon after saying that I think I was overlooked. A new person intervened and said, no, they were just trying to send me a message that I obviously didn't get. So I played my only card. I said that I knew every stock, every one, and I'm willing to describe it, tell you what price it was selling at, and what should be done with it. I said that if I failed, I'd never bother them again. Well, they took their turn one after another after another. To me, it felt like batter's practice. I don't think I sent maybe a couple to the lower deck. Most went to the upper deck, except for the ones that broke car windows outside the stadium. No fly balls, just home runs. At that point, the biggest naysayer told me that I'd gotten my foot in the door. But they'd slam the door on my foot unless I could get a job offer at the other iconic investment bank, Morgan Stanley. So I started that process, crashed cocktail parties, used the alumni network, waited outside with my Mo Ginsburg suit, and said I knew syndicate work, underwritings. Somehow, after many meetings with pretty senior people, I got close to an offer. With my gossamer break at Morgan, I went back to Goldman. And I got a summer offer. It was 1983 by then. A year and a half went by. Fine with me. I got a full-time offer at the end of the summer and even started doing some work for him before I graduated. Now, why do I tell this story? Because these places still have incredibly high standards all these years later, which is why the buyers should stop clowning around and finally realize that their stocks are worth much more than they're trading for, even at today's rallies, and they should be taking all offers. Today, Morgan Stanley and Goldman Sachs reported fantastic numbers, as they almost always do. Their stocks were up 5.78% and 4.6%, respectively. Yet even after these romps, they still traded at a ridiculously low 17 times earnings. Insane! These are not some episodic roller coaster firms. They're solid, granite, tungsten even. Yet they sell at multiples far lower than Colgate or Procter & Gamble, toothpaste, or just the average stock in the S&P 500. That's farcical. However, I think the investment banks are finally starting to get their due, and this is just the beginning, people. I'll tell you when it's too late to buy, but for now, we're definitely not there yet. They will go much higher, and I think, from my history, deservedly so. I like to say, as always, bull market summary, promise I've been just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.